Welcome to what I'm calling the encore of the 811 Trader Vision 2020 User Workshop. And this is an encore because there was a snafu with the recording, so I'm going to run through it again. So let's get started here. On our agenda tonight, we're going to go through the new goal view, including the various sections of the form, the goal section, the plan section, the difference between the plan and goal section, and then of course the graph to show that all to you visually. After we do that, we'll do a few examples. I'll walk through examples of setting a goal. I'll show you how to review your progress against a goal, and finally we'll show you how to compare sets of goal plans or goal blueprints or goal strategies, depending on your terminology. I hate to use the word plans too much or plan too much because it can get confused with a trade plan. So with that said, let's get started. This is the new goal view form, and as you can see, there are several sections. They are all color coded, and let me run through them for you. At the top we have the green area, which is my goal. This is where you set the goal or objective which you want to meet, which will then be broken down into smaller per trade goals. The orange section here in two shades is your plan or strategy or blueprint to reach that goal. It's labeled My Plan to Reach Goal. This tan section here is the difference between your plan and goal. And finally, the graph at the bottom. I'll go through the color coding here just quickly, and then we'll probably dig into it later. The dark gray is actual past performance. Light gray is a projection based on recent past performance. So if I continue to do what I've been doing, this is what will happen to the account balance. The green area, as color-coded, is the goal out into the future for however many months we have specified a goal. The orange line corresponds to the orange plan. That is a representation of your plan. And then the difference between the goal and the plan is represented by yellow when the plan is above the goal, or by, let's just run this down, by red when the plan is below the goal. It's hard to see, but believe me, there is a dark green line at the top of the red section. So the difference between the orange line and the green line, with the green line being above the orange, that difference then is represented in red. And of course, this is all shown in the legend for you. Let's go through the controls very briefly. We have the control box to select an account. We have a drop-down box also for selecting or adding a new set of goals and plan. We have a save button to save a new plan or modify an existing plan. The cancel button to wipe off the current work you're doing and leave the plan the way that it was, or at least not save a new plan if that's what you were doing. Down at the bottom we have another drop-down box that allows us to change the view of the graph. Future planning is how we view the current set of goals and plan that we're working on. We can then look at the current goal plan without the planning mode. We can look at the last two sets of goal plans, and finally we can look at the last three sets of saved goal plans. We have a couple controls here on the left and the right that allow us to control how much time the graph will show for us. It is defaulting to 12 months with a 12-month plan in the past and 12 months in the future. However, let's say that I wanted to see 18 months into the future. I just run this on out And now I have 18 months in the future, 12 months in the past. If I decide I only need to say 6 months in the past, then you just shorten that down to 6 months, and there you go. For now, I will leave this set to 12 and 12. Okay, of course you can always delete a goal using this red X. I forgot to mention that earlier. A couple tricks that I did not mention in the workshop today, and I should have, are how you can drill down into this if you need to see at a finer level. There are a couple options for you. So if you double click on the graph itself, it expands in size, particularly vertically, and that may help you quite a bit. Double clicking again puts it back. You can also left click, highlight an area, and then let go, and it will blow up that particular area so that you can drill down. And of course, each line at each date marker will show you values. So that may be useful for you. Single clicking again will put it back the way that it was. And this works both in the, I'm going to call this standard size window, or if you are in a full screen mode. Double clicking expands the graph. Double clicking again takes it down, and again you can highlight a section, left clicking and dragging, and then that will be blown up. Okay, so now that I've run through all of that, let's go through the process of creating a set of goals. Let's create a new set of goals, and let's do it as of using the drop-down box. Let's do it as of August 1st. It's a possible, you can do planning into the future, or planning into the past, I should say. However, that's probably only a demonstration thing. I can't think of a lot of good reasons to create a goal and backdate it, but possibly you could have a reason. And if you do, you certainly have that capability. You'll notice that the balance has changed from what the current balance was to what the balance was on August 1st. In this particular test account, I have $123,444.25. The goal sets the goal balance to that same value, the default 12 months. Also, you'll notice this little drop-down box. For those of you who like to plan in weeks rather than months, you have that option. You click weeks, and it would change the value to weeks, and everything is now enumerated in weeks rather than months. So you have that option if you prefer to work in that time frame. But I'm going to stick with months for tonight's example. So let's try to figure out what would be a good goal for us. We need to come up with a realistic goal. We've got 123,000 and change. Let's say that we believe 175,000. What's that do for us? Well, that's going to require almost 3% per month. And for some traders, that will be certainly achievable. It might even be light for some traders. However, for a lot of newer traders, that might be a serious reach. So let's see if we can't drop this down. Let's try at 165,000. Now we're at about 2.45. That's still about 2.5%. Some people may find that still too much of a stretch. Let's drop it down again. What if we say we can get from 123,000 to 160? That's going to require us to make 2.19% per month. Okay, that may be a stretch for some people, and it may be very easy for others. Let's assume for the moment that we feel that's a reasonable target. a little over 2% per month. Let's call it 2.2% per month. Seems like a doable goal. So now we need to create a plan which will help us reach that goal. And we'll do that in this dark orange area, first using 4 variables, 4 levers, if you will, that will allow us to organize how we're going to trade in order to reach this goal. Those 4 variables are the average win size, the average loss size, the win ratio or the win rate. In other words, out of 100 trades, how many are you going to win? And the number of trades that you do per month. In all of these sliders that we use to set these variables, you'll notice that there are values below the sliders, and those values are as of the date, which is August 1st. Those are the values for the account. So this is the average win size for this account as of August 1st, $806. And it's denoted by the triangles above and below, and then the value written below. That's not necessarily what we want to set. And of course, we've got this set to 0 to start with. For the average loss size, this account has $398 as an average loss size. So let's start out by setting just a number that's a little more realistic. This is a demo account and has some crazy data in it, and it may not be exactly realistic. So let's just run this up and say, okay, what if we said that we're going to win $250 per trade? That seems pretty reasonable. And what if we say we're going to have an average loss of $100 a trade? Let's find out what that would do for us. Setting those two values, $250 average win size, $100 average loss size, and we're starting with a win rate or win ratio of 60%. So we'll win 60% of our trades. That is probably okay. Let's leave that there for now. It might be a little high for some people, it might be low for others. The 82% on this test account is probably a stretch for just about every single trader. That again is because this is a demo account and it has dummy data in it and not a lot of actual trades. Okay, so with those 3 variables set, average win size, average loss size, and winning 60% of our trades, doing 1 trade per month, our plan is a little over 22% below meeting our goal. So let's start adding some trades because we can certainly do more than 1 trade per month. If you'll note, as we add trades, let's go at 3, we're at 20.38. At 4, we're at 19.53. So we're not quite getting 1%. Let's call it 0.9% by adding a trade. Well, let's look at moving these other variables, working on the other levers. What happens if we add a percent to our win rate? So a 1% win rate gives us 0.1% change in the difference between our plan and our goal. That's not a lot. So I guess we're going to need to start looking at the size of our wins and the size of our losses. Let's run this on up, just for argument's sake, to $400, maybe $450. Okay, so we set our average win size at 450. Our average loss size, if we're going to be more aggressive, we're going to have larger losses as well. Let's see if we can keep that, just for argument's sake, at $175. $450 average win, $175 average loss. 60% of our trades are winners. Doing 4 trades per month, we're still 16 2/3% below meeting our goal. Well, let's add a few more trades. What are we getting per trade now? We're getting, let's go. We were at 4 at 16.68. 5 was 15.05. So we're getting about 1.5% now per trade. Let's run this on up. Let's say that we do 12 trades per month. That would be only 3 per week, and less than 3 per week because there's a little more than 4 weeks in a month. And that still leaves us about 2.85% short of meeting our goal. If you look at the graph, you can now see that the goal area is open. Some of it is exposed, but that orange line, let's expand that out, that orange line is still not up to the top of the green area, and therefore we have red showing. So let's add another trade. We're still 1%, 0.98% below meeting our goal. What about 14? At 14 trades, we've got just under a 1% cushion. So our plan is just under 1% above our goal at the end of 12 months. For now, let's say that's enough cushion. We'll call that reasonable. We might want to make that a little bit higher to give ourselves extra cushion for a bad month, but let's say that that's going to be okay. That's the first, or actually the second step in determining if we've got a realistic goal. We've first decided that 2.19% per month seemed reasonable. Now we see that these individual variables are reasonable. Our average win size of 450, yeah, we've decided that that's doable. $175 minimum or average loss, that is again doable. Winning 60% of our trades, yes, we feel we can do that. And doing 14 trades per month, which is not 4 trades per week, so it's a little over 3 trades per week. And again, we think we can do that. The next step in the light orange area is to see what size trades we would have to make and whether or not we feel that leaves us with a reasonable average trade. So in this area, let's start with a 2% of the account in each trade. That would be $2,468 at this beginning balance. If we have trades this size and we use these parameters, the average win, average loss, and the win ratio, we have to have an average trade of plus 8.1%. You'll notice that it's pink because that's a pretty aggressive number, and you're being warned about that. So let's see if we can't increase the trade size. We could probably stand 2.5%. That's a little under $3,100 per trade on 123,000 and change account. And going up that 0.5% in trade size drops down our required average trade to just about 6.5%, plus 6.5% as an average of wins and losses, since we're winning 60% of our trades. Okay, that might be reasonable, but let's take it one step further. If we're willing to risk 3% of our account per trade, that's $3,700, $3,703, and that would drop down our required average trade to plus 5%. So we're going to win 6 out of 10 trades. We're going to win more than twice our average loss when we have a win, and that will allow us to have just a 5.4% average trade and still meet this plan. That seems reasonable to me. So the trade size is acceptable. The variable values are acceptable for a plan that will reach that goal. And at the raw level, at the monthly level, that 2.19% seems reasonable. All those things tell us that we now have a valid plan. So let's go ahead and save it. We now have our goal saved, 431. You'll note that the date reset to August 1st, and if let's expand this out. If you'll note right here, there is an area where there is dark gray behind the light gray. The reason for that is that it is not the 1st of August. It is actually the 11th of August, and the dark gray is actual performance. So there is some actual performance data, a couple trades, I believe, that I did for a demonstration behind this projection from the 1st of what would happen if this performance continued. There's our goal. There is our plan. And you can see a little bit of yellow there. Let's expand that out. You can see a little bit of yellow there as our plan exceeds our goal. So that gives us a visibility of how we're performing against our goal and our plan to reach that goal when we're in future planning mode. Let's take a look at a different, let's go back here. Let's take a look at a different goal. Let's go back here to an April goal. And that April goal had these values. And you can see how we could track progress against that from the future planning view or from the current goal plan view, which drops out that future planning values. You can see that we were coming up short of reaching that plan or that goal. And at each of these time markers, you can see the current value of the goal was $124,098, and the value of the plan was $125,236. However, we were only at $121,062. We can also compare the value of multiple sets of goals. So if we look at the last two sets of goals, you'll notice in the legend now that the current goal are the solid lines. The newest prior goal is dashed lines. Again, green for the goal and orange for the plan. And you'll notice this was a very bad plan set back here in January, because that plan was never going to reach that goal. Here in April, we set a goal where the plan was going to exceed the goal slightly, but in either case, we did not reach the plan or the goal here as of April. If we look at the last three, I'm sorry, when I'm set at April 1, there is no third prior. So let's go out and look at now the new plan that we just set. And we're looking at the last three goal plan sets. I'm going to double click this to expand. You can now see in the legend that the dotted lines are the oldest prior goal plan, so the one 3 back. Dashed lines are the next prior goal plan, so 2 plans back, and then the solid lines are the current goal plan. And if we want to drill down, we'll just left click, highlight, and now we can see a little bit better. The dotted lines are up here, the dashed lines there, and then the solid lines as of the 1st of the month. Okay. That really does demonstrate how we go about setting a new goal and a plan to reach that goal for the new goal view. Okay, in the workshop I then went through a few trades, and I'll go ahead and redo those as well. The first one was Etsy, and if you look at this chart, you'll see that we've got a beautiful J-hook type of pattern, and I'm going to blow this up. You can see we had this nice run up, beautiful run up, pull back on profit taking that was in a very tight area. I think Doug would call this a box, and today a pop out of the box. I would call this let's call it a trader's best friend, doji, strong bullish candle. There is a little teeny bit of a gap up there. We have not quite broken out. If you look at past history, you can see that we've got a support level there right below at about 1345, but the one I'm counting on is up here a little closer. You can see these lows. You can see these lows where it has acted as support. You can see its highs there and its highs here where it acted as resistance. And over here you can see where it really makes up the top of these last few candles prior to today. So I'm going to count that as our possible support level. And if I open up that Etsy trade plan, you can see that the SPY is trending up both in the short and longer term. I'm calling that a bullish best friend, or trader's best friend if you prefer. From a J-hook pattern, even though it's right at the breakout level, I decided that this high on this candle here, the 1457, that's going to be the breakout level. So we're at 1450 now. I'm looking for us to open below 1450 and then break up through, below 1457 and break up through 1457 for an entry. You'll note that 1464 was a resistance level right above there, so I may in fact wait for 1464. I'm going to use that 1390 as the stop level. The first target is up here at 1615, which is based off of resistance from these lows, these highs, and the top of this former peak. And above that, on up at these highs up here and there, as well as the 61.8 fib extension from that run. If we were to make that entry, use that stop, and make these targets, we would make a little over 10%, 10.25% at the first target, and that gives us a nice risk reward. So we've got a maximum loss of just under 5% to that 1390, and a gain of about 10.5%, I should say, to that first target, and that gives us a little over 2 to 1. If we can then run on up, possibly not in a straight line, but if we can then run on up and hit that second target, we get a nice almost 21% gain out of that. Overall, that would give us about 15.5%. So that's the first trade that I laid out this evening. And let's go to the second one, WMB. And let's pull up the WMB chart. With the WMB chart up, you can see that we've got this former J-hook that we broke out of, and we've been consolidating right at that breakout level just above it. And today we had a very nice candle. I'm going to call that a Morningstar type. We had the red day here, an indecisive day where we've got wicks above and below, and then a slight gap up to this strong bullish day that then broke out. So it definitely shows that the bulls are back in charge and we're back into breakout mode. However, you can see that we've got resistance, or potential resistance, just above, and that would correspond to the 23.6 fib extension of this prior run. So let's look at the plan that I've set up. For WMB, again, SPY is trending both up in the short and long term. calling this a bull morning star pattern here. Let's just go ahead and put a circle around that for you. We're calling it consolidation, and this is a consolidation area above that J hook. So it's consolidation above a J hook breakout. We're looking to have the stock open below this previous resistance was 26.59. So we may have to wait on this trade. And then we're waiting for it to run up through 26.59, again showing us that the breakout is underway. If we were to trade on that entry with a stop set here, which you say, well, why would you set your stop that tight? And the reason is that we're counting on support from these lows and from these highs, and from these, let's call it a breakout area of this consolidation to support for us. Because if we do break out above this 26.59 and then we fall back down through 25.82, that breakout has failed. And this consolidation is continuing at best, if not the whole breakout failed. The breakout of the J-hook failed. So I would want to be out of that position. So that's why I'm using the 25.82 as the number there, with just that one target for this trade. We have an 11%, 11 plus percent gain at that first target, which gives us a very nice, with that tight 3.27% stop and 11.13% gain, gives us a nice 3.4 to 1. So again, we may have to wait a day for this to break out through that 26.59, but when it does, open below, break out through, that's when we'll want to hit the entry. And Rick talked about this today. This is really a issue where it's an individual personality-based decision. Some people may say, well, if you like that breakout, why wouldn't you like a better price down here? Maybe you want to get an inside day off of today's nice 3.66% gain. And if that's the kind of trading you do and that works for you, you should do that. You should go for it. My personality is I want to see the breakout, and I want to see a little more confirmation that we're moving out of this consolidation. So that's what I'm looking for. There's no right answer there. It's just a question of your personality, because it is your personality that is going to determine how you handle the emotions of the trade, and you can't trade somebody else's plan. You have to trade your own plan for your own personality, because we all have our own different risk, greed, ego, and work ethic factors, and we are either calculated or we are emotional, and so we all have to have our own plans. That's kind of the whole point behind Trader Vision. So that's the plan that I put forward, and again, you may have to wait for it, but do with that as you may. That will be strictly up to you and how you as a trader like to trade. Let's look at a couple more that I ran through tonight, and these are courtesy of Doug, and I greatly appreciate his help. I've been really busy, and he was able to offer up some great suggestions here. Okay, here's a new issue. It's only been around since, I think, what is this? Since end of last year. But Square Technology, they do those phone-based credit card accepting sliders, I guess I'll call it. Readers, credit card readers. They've got this beautiful, beautiful rounded bottom. You could call this a cup, I guess, if you squint. And if you do that, then you would call this your handle, I guess. And that would be particularly true if you filled in this gap, if you drew a candle in that gap. In either case, you've certainly got a breakout. We had a beautiful breakout day, and then they took profits. And when the traders took profits, they then moved into a very tight consolidation range. And in that consolidation range today, we have a strong bullish candle showing that the bulls want to make a run at it here. So, with those things given, and this, by the way, this strong consolidation happened right at the 100. So the 100 simple moving average held, as well as this previous level off of the close there, and the lows there, and the lows here. So that may in fact be a strong support that we bounced up off of, or maybe it was the 100, but whatever it was, we had a very strong consolidation there, and now it looks like the bulls are stepping in. So what does that trade plan look like? I'm going to call that a bullish engulfing. It's not quite, but it's close enough. It certainly shows that yesterday was a very strong down day, and then today was a very strong update that opened very close to yesterday's close and then ran on up through it. And this is within a pullback, so it is a pullback opportunity. And again, I made a note that this was a tight consolidation and the bulls are now stepping in. So we're at 1137 closing price. We're looking for an entry of 1143, showing that the bulls are further in control, and I believe that was the high of the day, or perhaps a penny above the high. We're going to do 1095, a fairly tight stop here, again off these lows and that support level that I showed you on the chart. Our first target is going to be up here at the high, which is also going to correspond to highs in here and highs over there. So that 1228. Now that's a little under a 7% run. But if we have a goal that is reasonable, let's say for example, and by the way, I mentioned to you that this is a demonstration account, this test account, and therefore it has crazy goal at the moment because the plan was very aggressive and was the history was winning 8 out of 10 trades and so forth. But if you had a goal of making $150 per trade, for example, you could sell 200 shares at this first target, and even though you're making less than 7%, you still would make your goal, right? And so that might make it worth your while to consider this trade, particularly if you did not think that was going to stand as resistance and you were kind of counting on a run on up here to this previous highs. Let's pull that down to these lows here and the high here. If you were counting on it running on up into that, which would be a little bit more reasonable at a little over 13%, 13.33%, that could certainly be a decent trade for you. I would be careful at 1.5 to 1 risk to reward at that first level. But again, if you consider that not so much a strong level, then this is certainly one to keep in mind. You've got a 4.5% potential loss down to your stop from the entry price, and you've got a 7% win if you run up to that first target. Let's go look at the last one, which was ANF. And again, I believe this was another one that Doug pointed out. Abercrombie and Fitch. White screen of death. There we go. Okay, again, we've got a rounded bottom breakout in this case. You can see that we've come down, we've found a bottom, we've got a low, high, higher low, higher high, and again, we've broken out here again. We've still got plenty of room up to the 200, and actually we've got a decent amount of room up to the 100, which we know tends to be resistance on a rounded bottom breakout. You can see this 2341 level corresponds to the high back here and the lows there and possibly the lows there. So that could be a significant level, and that is in the same general neighborhood as that 100. So let's look at the plan that we put together. We're looking at an indecisive doji today, so that is a risk factor, on a rounded bottom breakout, and we're looking for it to open below 2185, which is below the high, and then trade above that 2185. So it's showing that the bulls are still in charge. If we bought 150 shares, and our first target was 2341, that level I showed you, that resistance level I showed you, off of this resistance here, and that resistance there, and that support there, and this support here. If that's our first target, that would be about 6 2/3%. Again, that's a little bit shallow, but if you had the right situation with the right goal, that might be worth examining, particularly if you decided that that was not going to be strong resistance, that's a weak resistance, and you're looking for a run on up into this level where we've got several touches up in here and highs there and highs there. If you can say we're going to run on up into that 2508 area, I just said 25, that gives you a much nicer number. So if you had used that 25 number as your first target, that would certainly work for you as a trade. With it, 2341 being the first target, perhaps not so much. That would be really up to you and what your goal is and how you want to distribute your shares. If you were to, for example, sell all 150 shares at that first target, you still only have 1.5 to 1, but you could make $223, and maybe that 223, fills your goal. And that's what trading's about, is making your goal. It's not about massaging your ego. It's not about being able to brag, I made 75%. It's about, I made my goal. I'm on target towards my longer term objectives. Okay, and that was it for the workshop tonight on the 11th. Let's finish things up. This evening I released update 1.89, which is the new goal view, as well as a couple minor fixes that I won't go into. They're kind of hard to explain, but one had to do with a counter of a variable within performance view when more than 10 trades were in a particular category. So let's just leave it alone and say there were a couple minor fixes, as well as the completely new goal view that was released. If you are up to date, which means you would have been on 1.88, or actually anything past about 1.7, let's call it 1.79, you are notified inside the application of updates. Underneath the help button, you will see a link that appears. You will also see a pop-up box that says, do you want to start the download? If you decide not to start the download, you can always use that blue link, which is underneath the help button, until you actually do the download. And like all other updates, you close TraderVision, run the downloaded program, and if your security software does not get in the way, you will be installed and be good to go. The database will be updated and so forth. You reload TraderVision, rerun it, and everything should be fine. If you do have any problems, you can always reach me at support@tradervision2020.com, or of course within the application itself you can submit a support ticket. You can do the same thing from the website, and in all three of those cases they will get to me and I will get back to you very quickly. So thank you very much for coming tonight, and we'll hope to talk to you soon.